Tuesday, December 6, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at how inflation destroys empires. It destroyed the Roman Empire and it is destroying the West. And I think we are near the end game for the West, to be honest. Before we go further, we're going to go through the questions today. And that's something we started yesterday. 3 questions every day from last week. So the first one is from the video, what the dollar index and gold are really telling us. Question is from AV. I think he's here in the UK. He says, Mary, can you suggest a good alternative to protect our savings? I'm talking here about middle-class, hard-earned savings. I am a recent follower to your channel, but I have seen you are rightly promoting investment in gold and silver, which, to be honest, I'm completely alien to. So if you could suggest where I could go to search for advice here in the UK, it would be much appreciated. Likewise, what's your thoughts on property investment in terms of using the savings as a deposit for a second property? Thanks. First question, check out Gold Investments. They're an affiliate. I've been doing business with them for 20 years. Details are below in the description. They will help you even as a novice. They'll explain to you all about buying gold and silver. Tell Oliver or Simon Temple that I sent you there. I used to deal with their dad started back in 2002. So it's a 41-year-old family-run business. So check that out. In terms of your question about property investment, I think property is a good investment in the long term, in the long run. You look at the very wealthy families that have been around for generations. They have a lot of property and land. The thing I would say about a second property, make sure if you do get a second property that you don't leverage yourself, don't take on too much debt, and maybe do it and have a little bit of gold and silver for liquidity. So to the next question. This is from the same video, and it's from Tiznus, T-I-Z-N-U-S. The question is for a person who already has a percentage of gold and silver in their portfolio. What is the next best investment to reduce exposure to fiat? Question 2, is there an investment of the above nature that can be kept in an existing 401k and IRA? So in terms of reducing exposure to fiat, aside from gold and silver, you could look at commodities, oil companies, and let's say agricultural companies, or even uranium companies that could reduce your exposure to fiat. Or you could look into mining stocks. I don't know if the gold and silver in your portfolio is just like a physical gold and silver. You could look at a company like Newmont or Barrick. They have a good dividend and they're gold producers. In terms of investments like that can be kept in a 401k and IRA, I'm not sure because I'm in the UK, but I think you can put gold and silver and stocks in your retirement account. You need to check with your financial advisor, whoever runs your 401k. Third question from Michael Abbott, and it's from the same video. Copper, the poor man's change. Will it come back? I think copper will come back. Maybe not as money, like currency or coinage, but I think copper, when I was at the Precious Metals Conference in Zurich, there were some copper companies there, companies that did copper and other metals, and they're saying that the demand for copper in the next 22 years is going to be equal to the amount of copper that has ever been mined and produced in history. So yeah, copper is going to be very important. I'm not sure whether it will come back as coinage. Who knows? So now back to the topic of inflation. And hopefully by now, having followed me for a while, and maybe not for the new viewers, we know that inflation is the creation of currency and credit out of thin air. not backed by real money, gold or silver. It's over issuing the currency out of thin air. That's what inflation is. You inflate the currency and the currency is diluted and it buys less. It's not rising prices that cause inflation, but we're starting to see, and I spoke about this recently, that Wall Street, the mainstream economists and central banks are pushing this idea that to get back to 2% inflation or CPI, that's really what it is, might be very difficult, and that they rather maybe get it only back to 3 or 4% in order not to rock the boat, not to create a big recession or big numbers in terms of unemployment. So this is an excuse to keep basically swindling the public, because that's what inflation is. Can you imagine if you could create currency out of thin air? Do you think people would be willing to take your currency for real things? And that's what happens. And that's what the Romans did. Of course, the Romans couldn't issue government debt. There was no government debt market at the time. So that they had to do it through the gold and silver coinage. And we're going to look into that today. The Federal Reserve and central banking has allowed the government to build a huge amount of national debt. And that's what the inflation is all about. It allows them to inflate without having to debase the coinage, because we have a fiat currency system, and very many people aren't aware of what that does. Back in 1694, Bank of England was created to do this kind of national debt and inflationary policy. Of course, prior to that, the Bank of Amsterdam, I think the Dutch were the first to actually start a central bank. And the United States, I mean, it's been since 1913, but don't forget, Andrew Jackson didn't renew the charter for the U.S. Central Bank. I think it was the second Bank of the United States in 1837. And the first thing he did right away was pay off the national debt, because he knew that the national debt is a ball and chain around people's, the nation's neck. And unfortunately, that's the way it's going. As you can see, the dollar has been devalued by 96% since the inception of the Federal Reserve in 1913. So we'll go to Rome now, because Rome fell because of inflation. Yes, there's a lot of debate about the different reasons why it fell, but I found a really good article which you should read. I'm going to put it in the description, a link to it in the description. It's called History of Hard Money, the Roman Empire. It's on vaulted.com. Highly recommended. So this is what it says here. When Matthew wrote his gospel in 85 AD, one pure silver denarius covered the daily wages of a skilled Roman craftsman. 300 years later, the denarius had been reduced to a worthless scrap of copper alongside a crumbled empire. Am I saying copper is worthless? No, but it's worth a lot less than silver for people. So, yeah, this is what the Romans did. Their empire flourished, of course, up until 100 AD. I think that's what this article says, that was the apogee in terms of land that they controlled. 5 million square kilometers, I think. And let's quickly go through the Roman currency system. It says the Romans built their monetary system on precious metals. The government minted and circulated the gold aureus and the silver denarius to provide citizens with a reliable medium of exchange. A centralized currency also simplified tax collection. So there you have the coins, from riches to rags. So why did Rome go down this path? Well, it says during Rome's expansion, tax revenue tended to cover imperial expenditures. Some situations, such as war, infrastructure projects, or natural disasters, pushed expenditures over revenue, but the Roman government covered the difference with wealth produced from gold and silver mines or conquered enemies. As the empire reached its zenith in 117 AD, Roman emperors encountered an ever-growing list of expenses without revenue to match. Rome's military-industrial complex perpetually added costs without ever reducing them. New borders needed protecting, new enemies needed fighting, new trade routes needed building. Eventually, the Romans ran out of ways to finance their expenditures despite having such a large taxable population. Well, that sounds really familiar, doesn't it? The United States, even the UK, they're probably taking in more tax than ever, but they still can't keep a balanced book. When a civilization runs out of money, they face three options. Take on debt, increase taxes, debase the currency. So they go through here like the Romans. There wasn't a government debt market, and you can't increase taxes too much because people will rebel. So they resorted to debasing the currency. So here's the silver content of the denarius. You can see it was very steady. It was just under 4 grams, the denarius there, pure silver. And then Nero started debasing it, and then it was downhill from there. So it took a couple of 100 years, maybe a little more. And the reason why it took longer than is taking the dollar since 1913, I think it's because they couldn't issue national debt. They didn't have a central bank. They hadn't thought about fiat currency and central banking. They had to do it through the coinage, and you can't do that very quickly. It's gradual. So yes, all roads lead to inflation, as you can see here. I think we're going down the same road as Rome, and we're very near the fall of the West, or the Anglo-American Empire. So with that, let's quickly look at the markets. I am later than usual today. I had to sort some personal things out this morning. It's 9:37 a.m. London time. So we've got spot gold at $17.73. It's up about $5. High's been 76, low 67. Yes, yesterday all asset classes came off. The dollar rose. I think it's just like a counter trend move. I think the way forward is still higher gold and silver prices. I'm not too sure about the stock market and the bond market. I think gold and silver are becoming more and more looked at because people want to have options outside the traditional markets. And yeah, that's the way I see it. So right now, spot silver is up about 30 cents or 1.3% at 22.53. High's been 57 and the low 22.20. So yeah, the stock market had a tough day yesterday. Right now, the Dow futures is up only 57 points. NASDAQ up 29 and the S&P is up 8.5. The currencies remain pretty steady. Yeah, they came off yesterday. Right now, sterling is down slightly at 121.72. The euro's unchanged. So is the dollar versus the yen. The dollar went up quite a bit against the yen yesterday. And versus the yuan, the dollar is back up slightly here at 6.98. The dollar Swiss is unchanged at 94.28. The dollar has strengthened versus the ruble. It's up around 63, just above 63. So we've crept up in the last few weeks from around 60. To the other currencies here, just before we look at the commodities, let's see, Aussie dollar is up 0.4, 67.24. The dollar is unchanged versus the Canadian, just below 136. And the Kiwi dollar is up about 0.1 at 63.25. So we've got WTI crude up 0.2%, 77.50. Crude got hit hard yesterday as well during the day when the US came in. Brent crude is up 0.8 at 83.34. High-grade copper is up 0.5% at 381.50. US nat gas is down 1.3% at 550. And Dutch TTF, nat gas futures, let's see where that is. Well, that's virtually unchanged at around 135. And to finish off, let's look at the bond market. The 10-year yield is down 2 basis points at 358. Yesterday it rose about 10 basis points. I think there's some comments from the BIS saying they found 80 trillion in FX swaps hidden in non-banks. Can you imagine how much more there is? This is not in banks. This is in non-banking institutions, and it's quite worrying. I think it's just the tip of the iceberg, and I think there's a Fed whisperer from the Wall Street Journal who kind of tempt things down. He said that they will raise by 50 on the 14th, 15th meeting of December, but that they might keep raising more for a longer period because of inflationary pressures. But I think the Fed is getting to a point where things could unravel, and they might not have a choice. This is just MOPE, this talk, Fed whisperer. When what's MOPE? Well, management of perception economics. So, if you enjoyed this video, make sure you hit the like button and make sure you share it far and wide. And with that, I wish you all a great day. Take care. Bye.